Welcome to Regulated Digital, where we explore how regulated organisations can do right by people's digital rights without losing human connection. Today, I'm joined by Paul Broadhead, Head of Mortgages and Housing at the Building Societies Association. We're talking about mortgage communication in a digital market, where journeys help, where borrowers still need that human reassurance, and what mutual lenders can teach other regulated firms about trust, vulnerability, and secure communication. Paul, welcome.
Hi, good morning. Thanks for having me.
Good morning. Thank you so much for giving us your time today. So let's talk about the borrower's experience first. When people are arranging, renewing, changing a mortgage, what are those moments where communication matters most?
I think, generally speaking, it's periods of uncertainty where people need to really understand things like what they can afford, when documentation is requested, but not just when documentation is requested, but why, when that application is waiting for a decision, and also things like, once they've actually got that mortgage, when rates or monthly payments are going to change, because quite often things work out to be slightly more complex than borrowers first believe. So I think in those particular moments, it's clarity that really, really matters, and it's important to let people know what's happened, what it means for them, what they need to do next. And also, if they're concerned or got any follow-up questions, can they speak to if they're worried?
Yeah. And I imagine lots of people are worried, probably not more than ever, but, it's been a difficult time in terms of interest rates and cost of living pressures.
Yeah.
Have borrowers' expectations or concerns changed?
I think you're right to call that out. I mean, first of all, we saw, didn't we, over a decade of ultra low interest rates where people generally took out a mortgage and then could almost forget about it, which is a perfect thing. If you've taken a mortgage out, you've got confidence then to forget about it. How do expectations change? I think people are a lot more anxious than perhaps they were 7 or 8 years ago, just because of the pace of change. So we've seen, as you said rightly, we've seen interest rates being relatively volatile. So interest rate rises, and then we've seen quite a lot of product withdrawals because of global economic events that affect the markets. I think what it's made is borrowers a little bit more sensitive to delays, uncertainty, and those unexpected changes. I think what they're looking at is mortgage journeys with the speed and transparency that they experience.
Yeah. And we know that regulation has set common standards in terms of how we communicate with customers, even more so with like consumer duty, recent developments. But I'm interested as our resident expert on mutual lenders, is it different, that communication process, that communication experience from a mutual? Do they have different challenges? Do they think about customer communications in different ways?
I think, yes, they do. Being customer owned gives you a completely different perspective to what you're trying to achieve. I mean, last year we celebrated the anniversary, the 250th anniversary of the first building society, which is older slightly than the United States of America. If you think about what's happened over that 250 years, global pandemics, and not just the one in our memory, Spanish flu, world wars as well, and always building societies have had to kind of reinvent themselves and reinvent how they communicate with their customers. So I think that customer relationship being absolutely at the centre is absolutely key. And I think it shapes communication probably in 2 ways. First of all, there's a really strong emphasis in our sector on long-term trust and value rather than just a one-off transaction. That's not always easy in the mortgage market just because of the way that operates, often on 2 to 5 year deals. But I think the sector feels a real responsibility to explain decisions clearly, particularly when customers are going to be making choices that affect their home, the family finances, or their future resilience, which is a big, big thing for many people at the moment, just making sure they're building up that savings habit, that financial resilience going forward. So yes, I do think it's different because the customer is always absolutely at the heart of every decision. There's no distraction with about how do we get this return to feed another mouth.
You would hope that that's the case for most lenders, putting the customer at the centre. But I do think there's at least in my household and growing up, I had this, you can trust a building society. I might not have understood at a young age exactly what the difference was, but there was definitely I think I had my first account with the building society. And that kind of development of trust around building societies that is perhaps most people don't really know specifically the differences. But there is this expectation of better communication and better support there. Is that kind of what you experience?
I think it is. I mean, we've always seen in every piece of research that we've done that the kind of customer feedback is stronger in the building society sector proportionately. It is against institutions of other types. And I think almost there's an instinctive warmth and support towards the building society sector, but quite often people don't quite know why, as you just articulated. For many people, it was going with the parents or the grandparents to open their very, very first account, which is a huge moment in people's lives that they don't forget. And I think the challenge for the sector is to demonstrate why people are instinctively trusting and warm to the building society sector. And that has to be through better service, better communication when people come along and speak. So I think the way the sector approaches the communications is being much more relationship led. So if you've got either a local presence or if you're taking your first account out of a building society, often a long-standing member relationship. And I think often people then think, well, actually, because they're trusted and traditional, that means that everything has to be done face to face. But it doesn't. It just means that as we move into that digital age with people that have grown up as digital natives, that we need to make sure that communication makes them feel supported rather than simply transactional. And all of that communication needs to be clearly responsible and human, with those extra routes being signposted to, look, if you do need more help, this is where you can go for it. And it's important that people have that channel of choice. And it's the customer that determines how they engage with the building society, not the building society saying that you must engage with us in this way.
Yeah. And we are becoming more digitally native and our journeys are becoming more digital. So it's quite hard to keep a hold on that humanity, that humanness in these journeys. We're in a kind of hybrid era where mortgage journeys, for example, aren't completely digital, but many parts of them are. Where are we seeing that we can best digitize mortgage journeys and where the human touch sort of still matters right now?
Yeah, I think that's a really interesting question with what we've seen certainly in terms of the AI revolution and the way people are using it. I mean, 18 months ago, most people in my industry weren't doing a great deal with AI. And I now speak to both our members and their members, customers that are using it almost daily, whether that be as a kind of a new search engine or something a little bit more sophisticated. But I think in terms of the mortgage journey, what we're seeing is that a lot of the administrative parts can be handled really, really well digitally. So uploading documents, identity checks, tracking where the status of your application might be, or routine reminders or product transfers. I think that's great. And that kind of validation, affordability information can just reduce some of that back and forth. I think where human support still needed is where advice, judgment, or reassurance is essential. I think advice is absolutely key here. People want typically to talk to somebody about advice, but once they've had that advice and they know kind of what they want to do, they found a property, they found the mortgage that they want, they just want to get on with it and interact on their own terms, in their own time, uploading those documents. So I think that is where the digital is really starting to pay dividends at the moment. I think over time we'll see a much more hybrid model with the inclusion of AI. And I think the way the mortgage industry is looking at that at the moment is very much as supporting advisors to free up time to spend more time with customers on the things that they want to talk to them about.
Yeah, it's interesting. I was talking to someone the other day about how we always think of digital tools as potentially as inhuman in a way that they can create anxiety. They can kind of push you away and they can feel cold, like you've not got the support you needed. But actually, when you mention identity checks, there are certain types of digital process where you feel like you have more reassurance in those journeys because of the digital tools, because you've got the time to do it yourself or step back and look at a form yourself. Where are the digital tools helping with trust and reassurance and helping people to kind of navigate their own way through? Whereas before they perhaps would have had to sit down with someone and do it face to face.
I think the first thing, I mean, and that's a really good point. The one thing to be clear about, and I think the regulator perhaps was a little bit slow to this party a few years ago, which is digitally native does not necessarily mean financially knowledgeable, because there was almost a perception, I think, that because somebody could quite happily speak on their phone or do applications or whatever it might be, that all of a sudden that execution only was the answer. And very, very quickly it was realised that it isn't. So it's about giving people their terms, and it's the customer choice about where they start that journey. And quite often the customers start it on a digital basis. But in terms of reassurance and anxiety, I think the digital tools can absolutely reduce anxiety where you are looking at certainty. So this is about too much information to somebody quite often is as bad as too little information. It's about getting the right information to the right person at the right time. So I think digital tools can really help us with that. Progress tracking and clear requests and confirmation that documents have been received and expectations about timelines. So not somebody submitting something that then says your application is processing. You don't know what that means. And 2 or 3 days later, it's still processing. But clearer communication about when that will have been actioned, what else is outstanding as well. Where it can increase anxiety remains on just what I've just talked about. It's that kind of your application's processing, something's disappeared into a black box, sent customers into a loop where they think, actually, how do I now get out of this and speak to a human? It's very, very unclear. So we absolutely need to make sure that we engage where people want to transact, but we give them an option at all times to speak to somebody if that's they want. And speak to somebody doesn't mean walking into a branch or picking up the phone. It might be a web chat, but it's that interactive communication that we need to let people have that get out at any point where they might have a question or need that reassurance.
I imagine for many of those digital natives, they would probably say, well, most of the journey should be able to be automated now, and I just need the support when I need it. You know, those kind of exit ramps off the journeys when something gets a bit too complicated. But as we know, you've got brokers have always been sort of central to mortgages. And what kind of role do they play in this hybrid era?
I think it's really crucial, the role that brokers play. As you said, you know, around 9 in 10 mortgages come through that broker network, and that's really good that people are going to get that advice and making sure that they're getting the right product for them, and they're often the person closest to that customer journey and providing that valuable, well, not just the advice but that support throughout. And I think where they're really key is in translating lender requirements, explaining the documentation and the next steps, but also managing expectations and keeping the momentum going. We know that, you know, recently there's been lots of research carried out that talk about the demand for technology within the broker market increasing as well, because they want a really clean interface, if you like, with their borrowers. And therefore what they need is a really clean interface with the lenders that keeps them bang up to date to enable them to translate what's going on in the lender's world to the client. And we're seeing an awful lot of investment right across the building society sector in improving those broker communication channels to give brokers the best tools to play that critical role of stepping people through the transaction.
Because lenders have got those kind of two customers, really, those two audiences that they have to cater to in their communications and in their digital journeys. Would you say that the brokers kind of came second? They've been slower to update digital tools and journeys for brokers than they have for end customers?
I wouldn't say they've necessarily been slower, but I think different organisations have done it in a different order. So it depends on that.
Depends on their legacy technology and where their data is, and yeah,
absolutely. So we've seen quite a lot of improvements in customer-facing apps, for example, but we've also seen an awful lot of investment in terms of that broker journey, because what does a broker, what does a broker want? They want a slick, certain service that they can confidently advise their client to go with a particular lender. There's this misnomer, I think, sometimes that best always means cheapest in terms of mortgage. And I think increasingly what some brokers are looking at is that client's individual circumstances that says, depending on the market you're in, you're looking at buying that property and it might be really competitive. There might be 8 or 10 bidders on that property. Speed and certainty is of the essence there, and the broker then needs to have the system that gives them the confidence that that borrower is going to get the mortgage in a timely fashion so that they don't lose that property, rather than being £20 a month cheaper, for example. So they're looking at the overall value and what's really important, and we need to be there to support them through that.
And you talked about choice earlier as well, making sure that you're offering the right choice of channels
Yes.
to customers. I suppose that applies to brokers in a sense as well, because you've got some brokers will want information in their portal. So they might have the need for things like APIs these days.
Yeah.
Yeah. And then you've got customers who are perhaps under different segments, or you might consider coming under different segments, like high net worth individuals. You might have vulnerable customers, which Consumer Duty has shifted even more focus on today.
Yeah, absolutely.
How do you cater to those edge cases that perhaps typically we had lots of regulation before that was trying to help us focus on those, but now we need to evidence that we're focusing on vulnerable customers and people who are perhaps experiencing more difficulty than others?
Yeah. I think. Well, first of all, it's being really conscious that a mortgage is not just a financial product. It's really tied to somebody's home and sense of security, and that has an impact on their well-being. And there's a whole, as you said, there's a whole host of reasons for vulnerabilities. It's not just a narrow definition. It could just include somebody's facing some financial pressures that can make them vulnerable at that certain time. But then you've also got your illness, bereavement, low confidence about interacting online can make people vulnerable, unexpected life events that make decision making harder. And it's really important, I think, just to make sure that we can, first of all, disclose support to enable people to have a safe space to declare if they're concerned or want to talk about a particular vulnerability, or they want the society to be able to adapt how they interact to make it better for them. We've put a lot of work in recent years in terms of identifying vulnerabilities without being intrusive. So giving people that kind of safe space to engage. And also, if you look at the branch network that building societies have, which is a growing share of the footprint on the high street for both building societies opening new branches as well as offset by the banks. Yeah. Closures. We've done some research recently, and what we found is that just short of 3/4 of vulnerable customers felt that their personal circumstances and needs were really, really well understood. And then 4 in 10 thought that they were signposted. So we're doing a lot of good work in that space in identifying that. There's always more to be done. And it's not one of those things that ever loses focus. It's really, really important that people, when they come to a building society, irrespective of their circumstances, they're treated with care, they can leave with confidence, and they're helped through the journey, whatever that product might be.
I suppose one of the largest vulnerable segments for lenders is people who are having difficulty with payments or in arrears. If you think about that, sort of 20 years ago, that's where you had the most anxious, or perhaps stereotypically most anxious communications from lenders, the dreaded red letters, right?
Yes.
How much has that moved on? The communication around sensitive affordability and debt, and how have you seen mutual lenders deal with that differently, perhaps?
Yeah, I think as you say, 20 years ago, it was very much about, we talked about an arrears process or a possessions process still happens in rare circumstances. You don't often hear that talked about now. You talk about supporting borrowers in financial difficulty, which is a huge change of outlook. And we've also seen regulation change to enable lenders to do more. One frustration a number of years ago was that if I was struggling to pay my mortgage, I hadn't missed a payment, but I was struggling to pay my mortgage and contacted my mortgage lender, there was very little they could do until I'd missed that payment. That's changed now. So people can have the confidence about speaking to their lender, knowing that they're not going to be put on a journey that starts possessing their house, which is a huge myth that we need to continue to bust. And we've now got a much wider range of toolkits. And again, it comes down to channels. For a lot of people that have ignored, the mortgage isn't the only product that's in arrears. Typically, it's the last one that goes. So there's likely to be other debts out there as well. So it's giving people the confidence to reach out, again, through that channel that matters for them, and to pick up the telephone and say, I'm really struggling, is a huge thing for somebody to do. And if somebody does do that, we need to make sure they're not sitting on the phone waiting and they're not telling their same story 3 or 4 times. So that's improved massively. Many people now start that journey digitally online as well, that sort of says, okay, I'm a bit concerned, I'm looking for a bit of signposting. And then maybe I'm looking for some budget planning. And there are systems now to step them through that. That means that as soon as they feel confident enough, they can flick a button or pick up the phone and speak to somebody. Where that differs, not necessarily to other lenders, because I think all lenders are on that journey at one stage or another, but other sectors, if you look at all of the focus has been in recent months about council tax, some of the communications from local authorities, just from one missed payment, which could have been an oversight. It might have been somebody just moved house and not made that first payment. Straight away was, well, if you don't pay us within the next 30 days, you either need to pay it all at once. And if you don't do that, then this is your timeline until you go to prison. I mean, that is, how do you expect a customer to engage on that? So I think as financial services, we're really, really progressing well when compared to many other sectors that have got a lot more work to do.
Yeah. And like you say, even very simple, what would seem like very simple digital tools, like being able to see all your debts in one place, how much is paid off, can, I imagine, make a world of difference to someone who's got those anxieties. That's quite sensitive information when we're dealing with all of these digital tools. When we're making our choice on different channels, we're opening up different ways of accessing this sort of sensitive financial and personal information.
Yeah, and language matters, doesn't it? We need to be calm, practical, and focused on the options, not focused on the consequences. So the starting point should be, the support available. Here's what you can do next. Here's the benefits of early contact. The vast majority of people that engage with the lender and they're facing difficulties don't lose their home because they get the support as early as possible. And it's like any other diagnosis. The earlier it's identified, the better your chance of recovery. And financial difficulties are no different to that. And we need to keep giving people the confidence to reach out. Life happens. It's nothing to be embarrassed about.
I imagine that's also kind of where you get people becoming most skeptical of communications, because it tends to be that when you deal with lenders more, it's a complicated scenario, and you might have multiple parties, some which you're already dealing with, some that you've been passed on to someone new to deal with. You might get that skepticism around fraud and scams come up. How can I trust this communication? Lots of the banks have done quite innovative things around this, making sure that you have sort of a number in your app that you can say over the phone to verify you are the right person and you're speaking to the right person. How have we seen the security around communications with customers from mutuals progress?
Yeah, similar things. I mean, I think first of all, which is a really positive thing, is customers are much more alert now to the risk of scams. A lot more publicity, a lot more skeptical, as you say, when they receive an unsolicited communication or a link or an unexpected message. And I think that's pretty healthy. I think anything that feels unfamiliar to somebody will stop them from engaging. So that trust, as you say, needs to be built through predictable, secure, easy to verify communications. I suppose it's like you say, whether it's a number that you put in, but it's also what we will never ask you for. So we will never ask you for your PIN code. We will never ask you for your security number. It might be the odd letter, and give people confidence. It's making sure they know that the communication is genuine because it's got a part of the postcode or a part of an account number in there, and letting them know how to easily verify that by going back to the main website if they're concerned about clicking through to a link, and also helping them recognize fraudulent messages through, how you can look at a suspicious URL or something like that. But this remains, this is an always on improvement, because as soon as lenders have done one thing, then fraudsters often are they come up with the next innovative thing that we need to keep up with. So two parts is that fraud prevention, and the other part is making sure we continue to communicate with people about the risks of those frauds and where they can go to reassure themselves.
And I think it's fair to say that we've seen quite an improvement in how those kind of identity processes work within communications. Now we're past you're dealing with one provider, one lender, but you have a different account for this product, you have a different account for this product and this product. We're now past that, and you've generally got quite slick ways to access all of your sensitive information, all of your financial information with one provider, and you've got backups like two-factor authentication and all these important things built in. We need to wrap up soon. I'm conscious of time, but what are the most important changes that you expect to see in mortgage communication over the next few years?
I think we'll continue to see communication become more intelligent and proactive through AI and automation. That's going to increasingly help with things like document checks, triage, affordability information, and updates as well. And then we've got agentic AI being the next step, because it's going to orchestrate tasks across workflow rather than simply responding to prompts as well. So I think we'll continue to get much more tailored in our communications and timely in our communications. I still don't see that replacing people overall. I'd see that driving efficiencies. And I think in the next couple of years, one thing that the FCA has already said is on its regulatory reform roadmap, which is a huge piece of work that's going on at the moment, is how lenders are required to provide documentation to borrowers as well. And I think they're recognizing that one size fits all approach that might have been great post financial crisis isn't fit for consumers that are coming taking out mortgages today. That information needs to reflect their much more varied circumstances and talk to them in a much more tailored way. And I think that review of that regulation will also give us the opportunity to make sure that we're speaking to people in a language that works for them through a channel that also works for them.
And we're set to see hopefully some improvements around property packs and things like that, which should again sort of improve that process a little bit.
I think that's a really important aspect as well, because what you've got with the property packs is a property that's mortgage ready and conveyancing ready, and that kind of education piece. And if we communicate effectively with consumers, even before they found that property, a property that's mortgage ready and a borrower that's mortgage ready is just going to improve the process for everybody, shorten time, reduce fall throughs, reduce cost, and improve confidence in the process. So the changes in the mortgage industry roadmap, coupled with the changes in the home buying and selling reform, I think gives us a real opportunity, as long as the government hold its nerve on following through on that.
Yeah, well, lots happening today with our new Prime Minister. We've got to let you go soon, but yeah, I think on the whole, that's a good thing. It's easier to communicate around a product that is simpler in the end, isn't it? Rather than sort of sticking plaster. We need to educate them about this and this and this and this and this. If you look 5 years, 6 years in the future on that journey to a more streamlined mortgage process, what would you, if you could say one thing that all lenders should remember that you don't want to fall through the cracks, what would it be?
I think it's certainty in the communications, because that is what people value the most. And whether that's now, 5 years' time, 20 years' time, technology can help us with a lot of things. But if the person managing that technology doesn't use it to communicate certainty, we still end up with an anxious borrower and a fragmented process.
And one more thing before I let you go. What are you most excited about this year, personally or professionally?
I think professionally, I'm really excited about the mortgage rule review, which sounds a really sad thing to say, doesn't it, actually? But I am, because I think if you look, we've not reviewed mortgage regulation for 12 years.
Yeah.
Mortgage regulation, I think, locking a number of creditworthy people out of home ownership. And I think we're going to rebalance that and give more people the opportunity to access their own home, which is great for them, great for their families, great for society, and great for the country. So I'm really excited about pushing through with that.
Paul, before we let you go, did you want to drop a link to your website or let us know how people can contact you?
Sure, yeah. If you go to, it's www.bsa.org.uk. There's a whole host of research around there about kind of consumer research that we've done, the social value of branches, and a lot of work about what will support first-time buyers.
Great. Well, I think we've ended at the perfect time, because I think I can hear a lawnmower outside your window. Thank you so much for your time, Paul Broadhead. We'll speak to you soon.
Great. Thank you, Sam.